Money, the root of ambition and destruction. For some, it's a tool. For others, it's a god. In the cold corridors of Wall Street, where numbers whisper and fortunes vanish overnight, legends were born, and many were buried. These were not just investors, they were architects of destiny. Men and women who stared into the abyss of the market, and sometimes, the abyss stared back. Tonight, we step into that abyss. We'll uncover 10 lessons from the most legendary investors of all time, truths written in profit and blood. Lessons forged through greed, power, and fear. But beware, every fortune has its curse. And every lesson comes with a price. So get ready. These are the top 10 lessons from legendary investors, and the dark realities behind their success. Number 10. Warren Buffett. Be fearful when others are greedy. In 2008, when the world was burning, Warren Buffett walked calmly through the flames. Banks collapsed, CEOs panicked, and investors sold everything. But Buffett smiled. He had seen this movie before. His rule was simple. Be fearful when others are greedy, and greedy when others are fearful. It sounds wise, almost poetic. But beneath it lies a chilling truth. Most people don't survive the fear. While the masses ran, Buffett hunted. He bought when blood filled the streets, quite literally, when millions lost homes, jobs, and hope. To him, chaos wasn't tragedy, it was opportunity. Buffett's genius isn't just patience, it's detachment. He removes emotion like a surgeon, because emotions lose money. Fear blinds. Greed kills. And yet, without them, can you truly win? Number 9. George Soros. Markets are moved by human fallibility. George Soros, the man who broke the Bank of England. In 1992, he made over $1 billion in a single night. How? By betting against an entire country's currency. He once said, "Markets are constantly in a state of uncertainty and flux, and money is made by discounting the obvious and betting on the unexpected." Soros didn't see numbers, he saw psychology, greed, fear, delusion. He understood that the market isn't rational, because humans aren't rational. And here lies the darkness. The market is a mirror. It reflects your fears, your pride, your impulses. To profit, he had to understand not what people should do, but what they would do. He saw panic before it began. He saw bubbles before they burst. Number 8. Peter Lynch. Know what you own. Peter Lynch, the man behind Fidelity's Magellan Fund, one of the most successful investors of the 20th century. His advice sounds innocent enough. Know what you own, and know why you own it, but few realize how deep this goes. He studied every company like an autopsy. He didn't buy stocks. He bought stories. He dissected them: management, competition, weakness. If a company had skeletons in the closet, Lynch found them. His warning was clear: most investors are blind. They chase hype, rumors, and dreams, without knowing what lurks beneath. You never really know what's behind the numbers, do you? Number 7. Ray Dalio. Embrace reality and deal with it. Ray Dalio built Bridgewater, the world's largest hedge fund, from a tiny apartment. His empire was forged from brutal honesty and relentless truth. He calls it radical transparency. Embrace reality and deal with it. For Dalio, that means facing pain, failure, ego death. He built algorithms to mimic his decision-making, removing emotion entirely. He replaced instinct with logic, human warmth with data. His company operates like a machine, precise, efficient, merciless. But behind that machine lies something darker: the cost of perfection. Every mistake analyzed, every weakness exposed. No room for comfort, no room for illusion. Number 6. Benjamin Graham. The market is a voting machine in the short term, a weighing machine in the long term. Benjamin Graham, the father of value investing. He taught the world to see stocks not as symbols but as businesses. He said, "In the short run, the market is a voting machine. In the long run, it's a weighing machine." In other words, popularity fades. Reality always wins. His protege was none other than Warren Buffett himself. But few remember how Graham learned this lesson from financial ruin. He survived the Great Depression. He saw fortunes vanish in days. He learned that the market doesn't reward noise, it rewards value. Because hype will fade, and only weight remains. Number 5, Jesse Livermore. The game teaches you how to play it. Jesse Livermore, the man who made and lost fortunes, and whose story ended in tragedy. He was one of the first true traders, turning $5 into millions through intuition and timing. He made millions shorting the market in 1929, then lost it all. His lesson: the game teaches you how to play it, if you survive long enough to learn. But Livermore didn't survive. In 1940, broken and bankrupt, he took his own life, leaving behind a note to his wife. "Things have not gone well with me. The markets gave him glory, then consumed him whole, because he played the game too long." Number 4, John Templeton. The time of maximum pessimism is the best time to buy. Sir John Templeton believed in buying when everyone else was in despair. During World War II, when bombs fell and nations crumbled, he invested in every company he could find. He was ridiculed. But when peace returned, his portfolio exploded in value. The time of maximum pessimism is the best time to buy. He saw opportunity where others saw death, but this philosophy is not for the faint of heart, because to buy in darkness, you must ignore the screams of fear around you. Number 3, Charlie Munger. Invert, always invert. Charlie Munger, Buffett's right hand, and the sharpest mind in Omaha. His mantra was simple, and terrifyingly logical. Invert, always invert. He believed the key to success was not finding what works, but identifying what destroys success, and avoiding it. He studied failure like pathology, the autopsy of human stupidity. He said, "All I want to know is where I'm going to die, so I'll never go there." To think like Munger is to live in constant awareness of danger, of what could go wrong. It's a mindset built not on greed, but on survival. Number 2, Philip Fisher. The best investment is in a company that can grow. Philip Fisher was obsessed with one thing: growth. He believed true wealth came not from bargains, but from finding companies that could multiply over time. He didn't trade stocks, he married them. He said, "The stock market is filled with individuals who know the price of everything, but the value of nothing." His research went deep, interviewing employees, competitors, even suppliers. He hunted for vision, for innovation. But here's the twist: growth can blind. The same optimism that builds fortunes also destroys them. Because when you fall in love with growth, you stop questioning. Number 1, the market itself. History repeats. Because humans don't change. In the end, every legend bows to one greater force: the market itself. It has no mercy, no emotion. It remembers everything, and forgets nothing. Every bubble, every crash, every panic. All of it, repeating, again and again, like a haunted loop. The lessons from Buffett, Soros, Lynch, Dalio, they all come down to one truth: we never truly learn. We build new systems, new strategies, but the same human flaws remain: fear, greed, arrogance. The market feeds on them. It waits patiently, watching, and when we forget the past, it strikes again. 10 lessons, 10 warnings. From billionaires who stared into chaos and saw opportunity. From minds who mastered fear, and those who were destroyed by it. If you listen closely, you can still hear their echoes. Reminding us, fortune favors the prepared mind, but greed favors the grave. Don't forget to like, share and subscribe for more uploads.